UK inflation data has come in far stronger than expected. I say far stronger. It was certainly more than what economists had been looking for. And of course, this adds extra pressure on the Bank of England to keep interest rates on hold. We're just getting that breaking news coming through from Davos with Christine Lagarde, the chief of the European Central Bank, suggesting that maybe markets are getting ahead of themselves, trying to price in some interest rate declines. Doesn't look like that's going to happen here. Look at these numbers. Consumer price index rising 4%. It's only a small rise against forecasts, but nonetheless, it's what we saw last week from the US and shows that inflation is likely to remain sticky. Economists had forecast a drop to 3.8% from 3.9%. Core CPI growth, this is at 5.1%. Expectations there had been for a drop to 4.9%. Now, it marks the first increase in the consumer price index here in the UK of inflation in 11 months. And we're expecting inflation to tick up again next month, January's figures, due to a hike in the Ofgem energy price cap. Economists then forecast further declines in this. I think what I want to show you is to what's going on the foreign exchange markets. Look at this. These are 1 minute candles for sterling, and you can quite clearly see the second that this data came out. And we're building on this at the moment. Now, that is sterling against the US dollar. We already know that the US dollar is strong, but sterling is absolutely up against the dollar. That being said, in the context, you can see sterling has been down recently. In fact, in today's session, at the lowest point so far today, we've seen it tick down to levels not seen since the 13th of December. So let's just put a little bit of reality on this against that stronger dollar. This is exactly what is happening here. But I think what is worth looking at, to take a look at what's happening in GBP EUR, which gives us an indication as to how sterling is performing against the euro. Very, very strong candle on the way up today, and much of that upside has been given to us in the last half hour since the release of that data. So I think the message is here is that we've got an issue that's faced by the Bank of England, where interest rates are just not going to come down as fast as many had been hoping. For example, the rate of core inflation, which strips out the volatile elements like food and fuel, remaining at 5.1%. Retail prices, which includes a bigger basket such as council tax, coming at 5.2%, down from 5.3% year-on-year. Forecast have been for that to drop to 5.1%. So looking at this green candle here, I suspect we could well see some further upside sterling against the euro. But don't forget, those news headlines coming through from Christine Lagarde suggesting that the European Central Bank is in the same position. Don't expect interest rates to come down as soon as the markets are pricing in.